Is it the crypto bear market? In this video, we're going to take a look at a lot of data to hopefully answer this question and put it concretely in people's minds as to what exactly is going on here in the crypto space. As we get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then go ahead and subscribe, tap the bell, select all notifications, and you are going to be kept up to date with everything that we do here at Cheeky Crypto. Don't forget to join us in Discord. We talk about a lot more about the altcoins and various different things that are going on in the crypto space down in Discord on a day-by-day basis. So if you're, got a question that you can't find the answer to on YouTube, join us on Discord, and we should hopefully be able to get that answer over to you. Right, with all that said, let's actually jump down into the desktop and take a look at this data. We're going to be taking a look at not only TradingView, we'll have a look at Glassnode, we'll have a look at a few other things, just to kind of understand what's going on and whether or not we are in a bear market. Okay, guys, so what we're going to do is we're going to start off with taking a look at this. This is a very familiar chart. We've been looking at it for a while on the channel, and basically we've dissected, the history of Bitcoin by the different timelines, and there's lots of different theories out there, right? And we had the 2017 bull run being slightly longer than the 2013 bull run. The 2013 bull run was longer than the 2011 bull run, and therefore people are speculating that this bull run will be longer than the one previously because the last three previous to that were extending, right? So you end up with that super cycle kind of theory where the bull runs are just extending. They're getting longer and longer and longer, right? And there's loads of different theories. It could be a spiral. We've seen that one. We've seen lots of different things, right? So for me personally, I think it's important that we understand that actually the rate of speed of expansion from bull run to bull run, okay, so this distance in here between the 2013 and 2017 bull run was longer than the 2013 bull run, but was longer by a smaller percentage than the difference between the 2011 and 2013, okay? So to get your head around that, it basically means that 2013 was vastly longer bull run than the 2011 bull run, which would make a lot more sense considering how new cryptocurrency was back then, right? Obviously the 2017 bull run was slightly longer than the 2013 bull run. Okay, and as a result of that, people believe that the 2021 bull run is going to be longer than the 2017 bull run. Okay, so these are just speculations at the end of the day. We haven't got enough data to really say for sure what is coming, what's going on there. Now, one thing that you do understand, if you understand elasticity, then you'll understand exactly what's kind of going on here. Specifically, if you take a look at elasticity over time, then basically what you're really looking at is a plateau. Okay, everything's going to plateau eventually, right? This is kind of how it works. So the diminishing returns will eventually come in. Everything is a bit like a curve. It comes up and then plateaus at the top before you get diminishing returns. And the optimization is right in the middle of that curve. Okay, so we understand how those kind of things work. It's kind of basic. You should kind of get that if you're analytical in any sense of the word, right? You should understand elasticity. So we understand that, right? And therefore, I'm not necessarily subscribing to the fact that we are going to be in a super cycle or anything like that, but we are potentially coming up towards that peak, right? Towards that kind of level of optimization, and eventually we'll start to see diminishing returns. Okay, it's important that we understand that nothing can continue to go up forever. Instead, you reach a plateau and then you start to pull back down. Okay, and then what you really want to do is optimize yourselves to make sure you stay in that sweet spot, which I don't think is going to happen here in the crypto space. But we are very, very early, so we are starting to see that diminishing return as we start to head up towards that apex, but we haven't actually kind of crossed that line yet. So we are still looking at that. So yes, I do think we're going to overextend on a like-for-like ratio. Like-for-like ratio puts us at 20th of December for a peak of Bitcoin. I would anticipate that actually it's going to be the Q1 of 2022, okay, for that kind of peak in Bitcoin. And again, that would actually be in line with the kind of the data flowing through this particular chart. Now, and that's not really what I want to talk about too much, other than the fact that obviously, it's too soon to end the bull run, okay? So that's the obvious one there. The other thing that we've spoken about quite a bit is obviously these bear market runs, okay? We can see these two here, these red areas on the Gaussian channel. And a bear market is not quick, okay? So a lot of the other kind of influencers or lots of things, I don't even know if I want to call them influencers or not, they go by different names, a crypto analyst on Twitter or an influencer on Twitter or whatever they want to be called at. You find that people say, oh, we're in a bear market, but don't worry, we're going to all-time highs real soon, right? No, that's not how it works, right? If you're coming from a traditional finance or traditional kind of market, then your bear market comes in at like 10-20%, and yeah, that's it, right? And then you run it down for a few months, and then you go into a bull run again. Yeah, that doesn't happen here in the crypto space. You have an 18-month period, a year and a half period of nothing but downtrend. Okay, and again, you can see that here. Okay, so if we go into a bear market, you're not going to be seeing all-time highs until, well, 2023, 2024, already 2024 if we're realistic about it. Before you even start to see the reversal on the trend, before you even go up to all-time highs, right? So it's important that we understand that a bear market is not necessarily what you want just yet, and not until you've seen Bitcoin kind of have that blow off top. Now, for me personally, I'm waiting for the alt season because that's pretty much where the majority of my bag is built, right? Bitcoin, I own a little bit of it. I don't buy it, I earn it, and I kind of leave it as that. And I won't go out and actively buy it. Same with Ethereum, right? I won't go out and actively buy Ethereum unless I need it for a transaction, which is just absolutely daft in itself anyway. But for the most part, I'm not buying those two assets. I'm buying the other altcoins because that's where the portfolio actually, magnifies and becomes massive. And then if you actually follow Chris's video the other day where he was talking about how much money he's made, just on the altcoin investments that we've spoken about on this channel, you can see exactly why. There's a couple of bad ones in there, but other than that, for the most part, they've been significantly higher performers than anything else. And it's hard to find an altcoin that hasn't outperformed Bitcoin or Ethereum, right? And that's just the truth of the matter. Numbers don't tend to lie. Right. So let's actually talk about this in a little bit more detail right here, okay, before we get into the glass node and we get into more detail. Here we can see the Gaussian channel, okay, and obviously we're wicking into this area a few times. If we close a weekly candle inside the Gaussian channel, that would effectively trigger a bear market, okay? And I don't say this lightly because this is what has happened previously. Come over here, we can come down to the Gaussian channel, but the second that we close in, it's confirmation of a bear market. Okay, we can check down here. Here's the other one. You can see how we wick in. This is fine. We can wick in, it's fine. We can wick in, it's fine. But if we close inside it, we're in a bear market. Confirmation of a bear market. Okay, so it's important that we understand that right now, last week we avoided it. Okay, we wicked in, we closed outside of it. This week, we need to close outside of the Gaussian channel again. Okay, doing this basically confirms that we are, bullish, not bearish. Okay, there's a lot of other things kind of going on in the space that I'm going to go through in a moment as well, to kind of confirm this. So right now we're narrowly missing the bear market. Okay, we haven't. We're not in a bear market yet. We haven't caused the bear market yet. Okay, but we are very, very close to doing so. Okay, and I say we, it's not really us as retail investors, but market makers, institutions, whales, the ones who are controlling the market. They are basically riding a very fine line. Okay, and we're going to get into some of that in a moment. We're first of all, we're going to turn the Gaussian channel off here, and then we're going to jump down into our hourly on Bitcoin to USDT pair. Okay, so this is what we were talking about yesterday. If you followed yesterday's video, we said there's a head and shoulder pattern. We're pushing up. We had the ABC here. I'm not sure if you can see this. We basically thought we were going to be pushing up towards this area. We had this scoped out about just short of 49k. We can see that we pushed up to the exact number of 48,900. And again, guys, if you didn't check out the Bitcoin manipulation video that I did last night, check it out because we go through all of the manipulation that's going on in this pattern here. Okay, and what comes next? So check that out. But basically here we are completing this ABC motion. Do expect to come down lower. Okay, potentially breaching and wicking down into that Gaussian channel. Okay, and that's the expectation. And then from there, I'm expecting a move out of the Gaussian channel, okay, by the close of play tomorrow. So basically that weekly close candle will not close inside the Gaussian channel if this plays out on the right timelines, okay. And we've got to bear in mind to check out that video if you really want to know what's going on there. I'm not going to go into too much detail, but my expectation is it's going to be pulled down into the Gaussian channel, shake out a lot of people, shake out some stop losses, shake out some short positions, some long positions, etc. And then we'll see the reversal. It will push back up, close outside the Gaussian channel again. Okay, watch out for that one. So what we're really going to do is jump over to here. Okay, this is the Glassnode platform. Basically, we're taking a look at Bitcoin, and we're taking a look at several things, right? So this chart here in front of us right now is the exchange inflow volumes, okay? All exchanges, as you can see, for Bitcoin with 1 day. So it's 1 day behind, okay? And here we can see the spike that was up here in May, okay? So when we were talking about, massive pullbacks, Bitcoin was at 65K and we saw it rapidly fall down, right? And that was the kind of volume that went onto exchanges to allow that to happen. Since then, there was a couple of spikes nice and high, but for the most part right now, we're actually relatively low, okay? And that's an important thing to understand, that there isn't terribly too much Bitcoin flowing into exchanges right now, okay? So in relation to what has happened previously and the kind of volume that was required to bring Bitcoin price down. Okay, now we go to the outflow volumes. Here again, you can see that there was a lot of outflows in May as well. Okay, again, pushing the price down, buying that dip, etc. And then I've seen there were some outflows recently spiked up on the 6th of December. Otherwise, the outflows are relatively small. Okay, now we can do the one that I really like, which is basically the exchange balance. Now, the exchange balance shows you how much Bitcoin is actually on that exchange over time. Now, we're just taking a look at this from a subset of data from November 2020 through to current, right? But if we actually do zoom this out all the way to 2019, you can see the amount of Bitcoin or the balance of Bitcoin on exchanges has significantly diminished over time, right? We had the spike up here, which was basically March 2020, right? Basically, when we had that crash of crypto space, the pandemic just started. There was a huge pullback on the stock market, crypto markets, etc. That was the spike where we had huge inflows of Bitcoin onto exchanges, and basically the balance sheet for Bitcoin with the exchanges was really high. Since then, we started to really pull back significantly as the bull run started. There was a couple of spikes right here. We can see this in July of 2020. Again, there was kind of like a peak for Bitcoin and many of the altcoins around end of July, beginning of August. And then obviously we pulled right the way down into the new year, doing incredibly well towards the end of the year. New Year's kind of starting around here, right? Diminishing. And then huge inflows of Bitcoin basically in May. And again, this is where then the balance sheets of exchanges started to actually increase with Bitcoin, right? And now we are seeing this huge diminishing return, right? Now, this is an important way to analyze what's going on with exchanges and with Bitcoin. Now, if we were in a bear market scenario, this little area here of inflows would be more significant to a rising increase of Bitcoin on the exchanges. Okay, and specifically, the balance sheet of these exchanges holding Bitcoin would be increasing, not decreasing, right? So the fact that the exchanges have less and less Bitcoin is a positive for a bull run and not confirmation of a bear market, right? That would be the other way around. So it's important that we understand, right? We have good data in the charts that are showing us that we are not in a bear market scenario because, we haven't closed inside that Gaussian channel, but I think we can significantly change that if we did get a closed inside. But I don't think we are, because Bitcoin's been heavily manipulated and controlled both at support level and resistance level. And this is basically meaning that they're controlling the exact prices where things are going. So do check out that video, guys. It's a very important one. And then obviously you have the data here with Glassnode showing you the actual data on exchanges. It is admittedly 1 day behind, but we can see as of yesterday that actually, the amount of Bitcoin on exchanges was diminishing. The balance sheet is diminishing. The inflows are diminishing, right? This is not what you would expect to see in a bear market. You would start to actually see an inflow increasing. You'd see the balance sheet of exchanges increasing as we have done previously. Basically, as people are selling Bitcoin to the exchanges or people buying it up, right? You'd see an inflow and an outflow that would be much, much higher than what you're currently seeing. Therefore, it's important that we understand that we are not bearish, but in fact bullish. And what you're actually seeing in this space is you're seeing retail investors getting shaken out of their positions. Okay, and this comes down to a lot of different things, right? You have people who use short positions, long positions, right, using leverage. Now, leverage is highly risky, and obviously exchanges and anyone can kind of go out there and actually take a look at those positions. You can kind of see it in Glassnode as well, right? You can see the amount of money actually in a short position, the amount of money in the long position. And if you're a whale or an institution or a market maker, you could potentially push the price of a particular coin to a point where that liquidates that position, right? And that money would then flow to you as you reverse the market and take it back to the other way. Ultimately, what you're really looking at is manipulation to a point where retail investors are getting absolutely screwed over. So the first thing that we would never use on this channel, and obviously I'm not a financial advisor, Chris is not a financial advisor, which is just kind of common sense on the channel side, is you wouldn't use leverage because it puts you at a massive disadvantage right away, right? Yes, it can multiply your gains, but it can multiply your losses significantly. We've seen people who have used leverage on Robinhood commit suicide over this kind of things, right? High risk, high reward, but ultimately it's just a gambling nature. So not something that we do on this channel, not something that we'd ever think about being something that would even cross our minds to use. Okay, first of all, it is just high risk, and it gives everybody the ability to see your hand, as Matt from Advice was saying, and basically take you out of play, right? So first of all, don't do that. The second thing that we do is we only invest what we can afford to lose, right? It sounds like a really simple kind of way of saying that, but what we truly mean by it is we buy the asset, we hold the asset, right? No one can take that asset away from us until we decide to sell it. Okay, we use things like the Ledger hardware wallet. There's a link to that in the description of all of our videos, and we put it into cold storage, right? And basically we hold the assets until we're ready to sell. We don't use stop losses, and we don't set predetermined sell points either, unless we get closer and closer, or like really, really close to those sell points in themselves, right? And basically what this does is it means that you can hold the asset, and when you're ready to sell it, you can sell it. No one's going to take that asset away from you unless you go ahead and, do some kind of lending against it, against some protocol that will liquidate you if the value of the coin goes down, or you use leverage or something like that. Now, when it comes to stop losses and sell orders, and things like that, that's also visible to the exchanges. Therefore, if the exchange is manipulating the price, they can also manipulate the price to a point where it can liquidate those positions too. So that's why it's important that we don't use stop losses or sell orders until we get very close to those particular targets of ours, right? Place those in, get the assets, hold the assets, and the second that you can see it happening within, a wave count. For example, you reckon that your sell orders are going to come in within the next 24 hours. Then you might want to actually put that sell order in place and try to get that one liquidated when you are ready. Okay, and when you do these things, you're not actually opening yourself up to too much risk. You've got the volatility of the market. But other than that, if you get your timings right, you're actually going to be performing incredibly better than many people in the space. This is a sum zero game, which means when you you make a profit, someone else makes a loss, right? It basically is exactly like that, right? And that's where leverage really comes in. Lots of retail investors who are using leverage are losing over and over and over again, right? Or some people are buying at the top, and basically that's the point when you actually be a lot of other people are selling, right? Sum zero game. When you make a gain, another person makes a loss, or when you make a loss, someone else has made a gain. This is really prominent with absolute garbage coins, for example, like Doge or 𝗕𝗘𝗪𝗔𝗥𝗘. Basically, people are FOMOing into these coins because of the meme culture, and then all of a sudden they're left with a bag that is, significantly worth less. And I kind of did a bit of a joke with this recently on the channel, where I set up a portfolio buying up a load of garbage coins at reasonably high values, and then obviously showing the P&L on that portfolio. Okay, and basically, if you're thinking Dogecoin's going to $5 because someone says that, and effectively, I bought into that, you can lose significant amounts of money, right? Now, obviously, I haven't invested in anything like that. I guess the closest thing to a shitcoin I've got is Ethereum, and the only reason I say that is because sometimes it can cost you more to actually move $100 of ETH from one wallet to another. It can cost you $300 to move $100. And if that isn't a definition of a shitcoin, I don't know what is. So it's important that we understand, right, that, I don't know, I've kind of gone off piece there a little bit. When it comes to a bear market, we are not seeing the data that confirms a bear market. What we are seeing is data that confirms a bull run. And we can go back to our chart here. And what we can do is we can actually confirm a few additional things. We just shoot up into this weekly chart. Okay, not only are we're following these 5 impulsive waves, I'm not really going to be talking about that so much. But what we can see is at the bottom of wave 4 here, we were oversold. At the bottom of wave 2 here, we were oversold. In fact, we were actually oversold just here as well. Okay, we were oversold actually just inside this little gap here as well. See that here? And we were oversold in this gap here. Now, why is this important? It's important because we're almost oversold right here. And what has followed each of these? We've had a spike here. We had the COVID pandemic pull us down. We had a spike here. 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 What do we think is coming next, guys? It's not difficult to understand. It's kind of quite a simple way to kind of just look at the market and just think, these things have happened time and time again. We're down here right now. What is going to happen next? We're going to get a spike up, and it's going to be a big one. So 2022 is kind of going to be an interesting year. We are seeing a lot of manipulation on the price action of Bitcoin. We are not seeing the data that confirms a bear market, but in fact, we are seeing data that in fact confirms a bull run. We are confirming that this is looking a very good move to the upside with potentially new all-time highs just around the corner. And if you're getting shaken out of the market now, you really need to consider why. And specifically when there's a lot of narratives also forming in the space. Sell 10 trillion of gold to buy Bitcoin, advises MicroStrategy 𝗕𝗓𝗪. You've got Florida governor investing $700K to let businesses pay state fees in crypto. We've got all of these other things on here. We've got Bill Gates talking about crypto and the metaverse. We've got, the US to embrace cryptocurrencies in 2022. Bitcoin to 500K. Ripple with the proposal to make Bitcoin more energy efficient with proof of stake mechanisms and so forth, right? The news articles, the narrative is changing. Are oversold or heading to oversold on our weekly stochastic. Glassnode has a diminishing return of Bitcoin on exchanges. Inflows are decreasing, not increasing. So overall, the markets are looking bullish, not bearish, right? And I cannot convey it any other way other than the fact that I'm not being shaken out of the market. I'm holding, and I know where things are going to go next year. Guys, I'm going to leave the video there. If you have found this useful and informative, then do go ahead and hit the like button. I really do appreciate that. If you happen to be new to the channel, then do go ahead and subscribe. Tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. With this said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.